Hello everyone. Mini Professor Olivier is back again. Are you ready for a new weekly analysis of financial markets? If you enjoyed this weekly video, please show me your support and like it below, you will make my day. So, let's start. Markets have started the week in an upbeat mood, focusing on calming words from the U.S. Federal Reserve Chairman, and ignoring the scenes from Afghanistan for now. The deadline for the U.S. withdrawal from Afghanistan passes today, but investors appear unconcerned with markets in the U.S., Asia and Europe all moving higher so far this week. Only the UK, which opened today after the bank holiday break, posted modest falls among the major markets. In the U.S., both the S&P 500 and the Nasdaq moved to new records last week, as investors reacted well to words from U.S. Federal Reserve Chairman Jerome Powell. As expected, Powell confirmed at a virtual Jackson Hole Economic Symposium that some tightening of monetary policy was likely, as the Fed's goals for inflation and the labor market get closer to being met. The first move is likely to be a scaling back of asset purchases by the Fed, and that could happen this year, although Powell indicated that rises to interest rates were much further away. It is apparently that which has eased fears in the market. The economic news calendar will be busy in the Eurozone this week, where consumer confidence will figure in the schedule of economic data, along with GDP growth readings from France and Italy. Eurozone inflation data released today showed price rises on the continent running at their highest level for 3 years. Just as in the UK and the US, monetary policymakers will have to decide whether the spike in inflation is temporary, and something that will clear once pandemic-related disruption to supply chains eases, or if a more robust tightening will be required to choke it off. Meanwhile, in the UK, it's a quiet week for economic news, with house price and mortgage borrowing figures on the calendar. The news today included the Bank of England's latest money and credit report, which showed households deposited an additional £7.1 billion sterling with banks and building societies in July. That was slightly lower than the average net flow of £8.8 billion sterling between April and June 2021, but still relatively strong, the bank said. The corporate diary is also quiet this week, with the biggest name globally to report being Zoom in the US. Other news of interest to traders looking at the UK stock market will be a warning over the weekend that the strong recovery for UK dividends could be held back, due to concerns over defined benefit pension scheme deficits. New powers for the pensions regulator, which begin in October, mean that company management who have agreed dividend payments could face a legal challenge if their company then goes bust, leaving the pension scheme in deficit. There have been warnings that this threat of legal liability could dissuade companies from paying dividends, where they are also running a shortfall in their pension scheme. More than 5,000 UK companies are currently running such a deficit. That's all for this week. I hope you found this markets update useful. Please don't forget to like it below, and you'll make my day. Thank you very much again. I wish you all an amazing week. Goodbye.